Good morning, everyone, and welcome to Capital Without Borders, a podcast brought to you by Interpolitan Money. We'll be discussing how money really moves across the world and why global finance is often more complicated than it seems. Interpolitan Money's mission is to power the movement of capital across borders for the world's most sophisticated clients. And here at Capital Without Borders, we're speaking to our global network of like-minded partners who are united on that mission. My name is Kate Edwards, and I'll be your host. You can listen to this podcast on Spotify, or you can watch us on YouTube. And don't forget to subscribe to us and follow us on LinkedIn and Instagram at interpolitanmoney.com for updates. If you would like to find out how Interpolitan Money can help you or your business, please give us an email at partnerships@interpolitanmoney.com. Now, without further ado, I'd like to introduce you to our guest today. His name is Robert Johnson. He is the Managing Director of Classic and Sports Finance, the UK's leading intermediary for specialising in classic car and asset finance. Hi, Robert. Welcome to Capital Without Borders.
Good morning, Kate. Lovely to be here.
Good morning. Thank you so much for joining us. Will you start off by just introducing yourself and what you do in your own words for our audience?
Yes, of course, Kate. We're a well-established business in the intermediary markets. We provide funding options for high net worth and ultra high net worth who want to buy luxury assets, really, boys' toys, as we call them. Anything that's have got value, we can provide funding for. And it's an interesting sector, and it's got real depth to it these days. And we'll talk about that, no doubt, as we go on. But that's basically what we do. We provide funding options for people to buy luxury assets.
Brilliant. Great. And how long have you been in that industry?
I've been in the industry over 40 years, with this particular company, nearly 30.
Amazing. Amazing. Okay, well, let's get straight into it and let's discuss what you think the biggest opportunity in the luxury asset finance space that banks and lenders are missing out on.
It's a really good question, because lots of private banks, and we operate really in the high net worth sector, as I said earlier, but private banks provide lots of facilities for their customers, but very few of them actually provide a product for an individual to buy an aeroplane or a boat or a luxury car or jewelry, or even things like a Steinway piano, a watch. All of these items actually do need capital to buy them, and they're a large outlay. And I just find that private banks actually, they're geared for property, they're geared for levering against share portfolios, but they don't do asset finance. There's only two in the market I'm aware in the private banking sector that actually provide that service, to be fair.
Yeah. And when was the last time that you saw this missed opportunity cost a client real money?
It doesn't cost them money, because we find the solution. And there's lots and lots of areas. You know yourselves that banking is multi-layer. It starts at the high street, which everybody knows, and then it rolls into the private banking sector, the so-called high net worth sector. But there's lots of tiers, what we call second, third, and fourth tier below that, where the money gets more expensive, but the flexibility is there. So it's what we call rate for risk lending. So there's people out there which are subsidiaries of larger banks that will lend against boys' toys, but at a cost. And what we've tried to do over the years is to establish a business where we can provide competitive money on a diverse range of assets. So if you came to me, and I love this particular sector, and it's not, it is, and it isn't high net worth, but I've recently funded a steam train, and I'm sure all the listeners will smile and go, "What's a steam train?" Yes, it's a Thomas the Tank Engine steam train, and actually that sector of steam and road, what we call steamrollers, they're collectible items. And the particular individual who's purchased that actually has a big collection of cars, big collection of motorcycles, flex watches, has all the lifestyle products, boats, he's got a small helicopter, but they're collectible items. Now, if he went to his private bank and said, "Could you find me a facility for that?" They probably could, but they'd lever against property or his share portfolio. And we've actually found a way of actually, I've got a credit line with a private bank, funny enough, who understands what we do, where we can lend directly against that asset. And that's the difference. In bulk of the business we have is that we can capital release, or refinance as it's sometimes called. And basically that is lending against assets that you already own that are unencumbered. Let's remove the word asset for a second, because asset conjures up, there could be a printing machine, it could be anything, it could be luxury asset, it could be a financial asset. So if somebody, and this is where the bulk of our business is, as I said, if somebody, a high net worth individual, owns a collection of cars, and most of our clients are car orientated, that's how we got this business going. So if you own 10 or 15 cars, if you own 10 or 15 cars, it generally means that you're an enthusiast. So those cars will be of the higher end, not always, but the higher end. If they're unencumbered and you have £1 million worth of cars, we can lever against that. And what that means is we basically refinance unencumbered cars. And I'm finding now that more and more people are doing that than going to their bank or to any other financial institution they work with. We tend to find that they find it easier for us to do. I can turn around £1 million transaction against unencumbered cars in 5 to 7 days. Now, why would somebody do that? Why not go to your bank? The problem with going to your bank, I know you're a bank, but the problem with going to a high street bank is, as I said earlier, they want to take a charge on property. They're just not set up for dealing with the actual asset itself. And the reason is, Kate, is they're not geared to valuing. So what makes it different here? Experience. I've been doing it so long, and my team's been there so long, we see the same. There was only a certain amount of one car made. So if we pick an old Ferrari, for example, there were probably only 150 of a certain model made. That means that car is identifiably valuable because of what it is. To lever or to offer that as security against a good old-fashioned hire purchase loan, competitive interest rate is easy. It is easy if you know where to go in the financial markets to get that capital. And I just find generally private banks are not geared for it. We go back to what's the missing opportunity or the issue. The issue is that the smaller banks are just not geared for it.
Yeah. Those collections of cars, they must hold quite a lot of sentimental value to your customers. How do you help your customers to create value from historical and sentimental assets?
Well, when somebody needs cash, and it doesn't matter how wealthy you are, there's plenty, in fact, the majority of our customers are actually asset rich and cash poor. And the saying is that if you're a multimillionaire and you've got £1 million in the bank, you're not very good with your money, because it shouldn't be in the bank. It should be working somewhere. So, sentimental value. If somebody needs capital quickly, what's the easiest thing to do? Dump your asset. And you're probably, by using the word dumping, not going to get the true value. And it may not be the right time to sell that particular item. That's where we can make it not just financially beneficial, but you keep granddad's vintage Bentley that you've had for 40 years. Yeah. So that sentimentality is kept there. It's when we work with our customers, Kate, it really is. I think of it as putting my arm around the individual and we go on the journey together. It's not a across the table transaction. And that's why I've had clients in this business since the beginning. They're aging and people come and go, so to speak. But our customer base is very long term because of that relationship of understanding who they are, what they are. And I've helped people build those collections. So the natural thing for them to do is to come to me when they need to refinance it or release capital out of it. Collections of cars are quite easy to do, but we can do it with any asset at all with value. I mentioned a piano earlier. I funded a Steinway piano. It was not hundreds of thousands, but it was a valuable item, and it's got value. If it's got a serial number, Kate, simple rule. If anything has a serial number and you can identify it, then it's financeable. You can lever against it for a loan.
So you mentioned the piano there, but I'm sure you get this question a lot. But what is the most unusual asset that you've ever financed against?
They're all unusual, really. I would say it's not an unusual asset. But the highest value was $20 million I funded on. Very famous car out of the US. I don't find anything unusual anymore. Steam engines, watches, as I say, jewelry, collectible firearms, not firearms as in shotguns, Purdy shotguns. Anything that anyone finds unusual and rare is financeable. I've done a lot of art over the years as well. Art is very financeable, because it's considered an investment class.
Okay, amazing.
So no shockers there. Nothing very unusual.
I think the steam engine was
the steam engine. Well, to me, I took the call on that, and I thought that's the first time. And one of the things to think about there is, if that individual doesn't pay, and we have a default situation, how am I going to collect a steam?
Are you going to pick it up?
Yeah, but so those sorts of funding opportunities need to be carefully.
Yeah, absolutely. So moving on to debt restructuring, what is the most common pain points and what does a good restructure look like for you?
Okay, the pain point with any debt restructure is the valuation of the items. It takes a real specialist to value. Let's suggest there's one of 3 cars that was ever made. And it's hard to believe. If you go back to the 50s and 60s, or even back to the 1920s with something like a vintage Bentley, there may have only been 1 or 2 of them made. So how do you value that? That item is worth literally what somebody's prepared to pay for it. And that's very tricky when you're lending money against it. As a financial institution, if in a recovery situation you need to recover the item, where do you go? You go to an auction. An auction isn't necessarily nowadays the place to sell something. It depends who's in the room at the time. So they're the challenges with debt restructure. The other challenge is that generally, if they need to restructure debt, they could be in a generally stressed situation. And to lend money to an individual or an institution that's in a stressed situation sounds like the most natural thing to do. But of course, when you try and present that, get that through an underwriter, the underwriter's looking for the risk. So the challenges are if the debt restructure is for a stress situation, that is a challenge. We have to work hard with our clients on that. If it's literally a capital raising exercise for the speed of doing it, that's quite easy. I meant to touch on it earlier. We do find that the routes that we use into the banking sector are far, far easier, seamless, in fact, than the high street banks can provide in lender. If you try and raise money to buy a property, a commercial property, as an example, Kate, the process you have to go through with valuations, with documentation, with authority to sign, and so on, it takes weeks. And by levering against something that's in the garage is easy. I promise you it's easy. But I would say that, but it is easier.
So moving on to cross-border deals, a major theme of this podcast is moving capital across borders. In your experience, when the buyer, the asset and the repayment sit across different jurisdictions, what is the first thing to typically break?
A simple question to answer on cross-border funding is we cannot do it. In my sector of loaning against, if something you're loaning against is sitting in Dubai, and again, it's all about the risk of the lend and the recovery, to extract something you own or a financial institution owns from a foreign country is near on impossible because of literally the different jurisdictions. So what we find is when we're asked to fund something that may be sitting in somebody's international property or one of their businesses abroad, is we have to focus on what they own in the UK. So the restriction on what we do is that our clients need to be what we call landed in the United Kingdom. So that means to me, in the system, UK taxpayer, UK bank account, and basically a presence here. So what we would say is, as I said, in the system, really. So they need to be a property owner here, a homeowner of some kind. Now, at the high net worth end, that does create complications sometimes because houses are held in trust and they're held by businesses that are actually offshore or in the Isle of Man or Jersey, Guernsey, even further. But if somebody is operating here in the UK, they're generally in the tax system. So funding abroad is not something that I've managed to conquer yet. There are people that do it, but they do it through international banks. It's not something that we provide, although I do understand it may be out there in the system and growing.
Yeah. And are there other challenges that you see for international clients?
You and I know from the bank said that there's a lot of KYC that's been introduced, which is know your customer. So all of my staff here have to go through anti-money laundering courses. They go through corruption finance courses. They go through all of those layers to ensure that they understand the risks with handling international inquiries when we do get them. And most of my car inquiries from abroad are from the US, funny enough, which is a long way away for us in the UK, but the US and mainly Germany and the Netherlands. And because I believe that those countries are more car orientated than somewhere like Spain. Bless you, all good to space and Spanish. So the Germans love their cars, the Dutch love their cars, the Americans love their cars, the English love their cars. But to lend into somebody that lives in Germany and is buying in Germany is not something I can accommodate at the moment. We're looking at it. It's a big gap in the market. There's nobody that I am aware of in the financial institution that will do that type of transaction.
So would you say lenders are genuinely open for businesses in this niche, or they're selectively defensive?
I think they're not open to it, but I think it's a massive opportunity if they can get themselves into that space.
Yeah, absolutely. Okay, so a quick question about fraud and compliance. What patterns are you watching in 2026? And what's one process or tool that materially reduced risk without killing deal speed?
Good question. The source of an individual's income is what we're absolutely pressurized through the Financial Conduct Authority and the banks that we use to raise capital from to lend is the source of the income. With the world, the way the world is at the moment, geopolitical system and the way things are happening, the source of where capital is moved is very prominent. And the UK is quite strict on that, as you know. So a key part of underwriting any case is how's that individual going to repay the debt and where do the funds come from to repay it? When we're funding an item bought through auction, the restrictions and compliance on an auction house is really strict. It was clearly an area where money laundering was abused in the past, I would say. And we are very, very careful to ensure that we do know our customers. Three principles I worked in. Three principles. Who are you and can we find you? The second principle is serviceability of the loan and where do the funds come from to pay for that. And the third item is, are we asset secure? So we will never lend 100% against any item. It's always a loan to value of 70 or 80%. But the KYC part of the whole banking industry, as you know, is very, very strict at the moment. Very strict. And it does cause us problems because people are far more international now. Even an English citizen, the majority of our clients have properties abroad or they have businesses abroad. And they find it quite frustrating that that activity abroad can't be can't be brought into any consideration of underwriting in the UK. That is out there. And that, again, is an opportunity, Kate.
Absolutely. And when you're working with a non-traditional payment partner, what adds the most value to your clients?
Speed. It is the speed of turning something around. As I said earlier, if you were trying to buy or raise money for a property directly, it is very, very time consuming, legal costs, valuation costs, and it's just so much easier if you've got a garage full of cars or a boat down on the Solent or an aeroplane up at High Wycombe Airport that is actually a tangible asset that I can get to, value quickly, prove title, and then money against it. It really is so simple. And the gap between buying directly from the bank and levering against an unencumbered asset is so big, and it shouldn't be. Because actually, we somewhere in the process, we're going to the institution to borrow money. It's just not that particular division that deals with the front end client. It's a very strange scenario. Very strange,
Yeah.
but good for us because it means we can literally turn around 7-figure transactions in 5 to 7 days, start to finish. It's really, really, really seamless stuff. But we've spent years building relationships with finance institutions that trust the way we do it. We understand them, they understand us. There's a joint appetite to get things right.
And what services would you like to see providers offer that aren't already available on the market?
Better valuation, more specialists in in certain sectors of valuation. So if I came to you guys and said I've got 4 Steinway pianos that are going on tour with an ex company that are a music company, and they need to spread the cost of the purchase of these pianos, who have you got in your institution to value them? Where would you go? And it's that knowing where to go to value certain items, knowing who to talk to. And I think that's the key to any business, is having a black book that you've built up over the years of people you know who to talk to do certain business with. I've got a black book. I've known people for years. I can pick up the phone and take advice from somebody instantly. I think that's a big key of providing a good service, is being able to there's no shortcut to experience at all. And I think that's what people come to us for, is that ability to get something done, to get it done.
And speaking of servicing your clients, what about them? What is the ideal client for you? Are there any kind of red flags that would make you not want to work with somebody?
Not everybody on paper is obviously high net worth or obviously good to work with. And again, it's just, I think I've been in the industry long enough, my team have, to engage with people in the way that we understand how their lives work. Everybody out there is trying to make their lives more streamlined in terms of taxation, and you wouldn't be a good businessman if you didn't try and make your company or your income efficient. You just wouldn't be. So the challenges we have with individual, we need to know you're going to pay. There's no point having a shop where somebody walks in and takes something out and they don't pay. It's as simple as that. So that relationship needs to be ongoing. It needs to be trustworthy. People's lives change. I'm seeing it quite a lot at the minute. People's lives do change. And where they were high net worth 5 or 6 years ago, they may have a business that has absolutely changed and they're in a difficult position. We're also here to help those people. It's okay. We're not a charity. We do it in a commercial way, but we hold a responsibility with clients we've owned or worked with for a long time to support them in good times. And we support them in the not so good times. But we're here to assist those people at whatever level where we can. But it has to be done transparently, honestly, and supportively. So we work with customers. People say to me, what do you do for your customers? I didn't do anything for my customers. I work with my customers to get them where they need to go. Selling is 2 ways of looking at selling. It's something I do to you or I do for you. And I'm here selling, but I'm selling a service to get you where you need to go. And we work with people in that way. that's what I enjoy about what we do.
Amazing. Yeah, definitely. And looking ahead for the 2026 year and 2027, where do you think the future of luxury asset finance is heading? Any kind of controversial opinions or anything like that?
Our challenges, Kate, are every morning we all wake up and somebody across the world, wherever that may be, changes or moves the goalposts, and the whole scenario changes. And I think small businesses like ours, we're a small business, we're a high value but small boutique business. It's a challenge, and we've got to be on our toes, and we've got to be reactive, we've got to be agile, and we've got to keep our eye on the ball to make sure that we're servicing those customers properly. The customers that are already our clients who already have debt with us are mentored. If they're in trouble, we need to watch and make sure that if a certain sector changes, so if legislation changes on the collecting of classic cars, so if, for example, a tax issue changes on owning classic cars, that can change the whole dynamic of somebody's life. A lot of people collect cars and items, luxury items, to get towards they're like a pension pot, a diverse pension pot. They want to get to their days of retirement, and then they will sell those assets, and then they've got their lump sum to retire with. Well, if the tax regime changes on owning a luxury asset, it could change. It's a game changer.
Interesting. Well, we'll see what happens in the industry over the next couple of years. Just to finish us off, is there one kind of point that you've mentioned today that you would like listeners to take away with them? The main thing that you'd like them to remember?
I would, without selling myself and my business to them, is that I think that we still apply, and I think it's disappearing in the world of commerce, a personal touch to what you're doing. It's very hard to speak to anybody in any industry now that has experience and understands what you're going through or what your challenges are or opportunities are. There are still people in the industry that will pick up the phone and have a meeting rather than a Teams meeting or an email. We are out here, and I believe that's the right way to do business, and we're open for that. We're open to that every day of the week.
Amazing. So personal connection still exists.
Absolutely. I believe it's beginning to disappear, and culturally, I don't think it's very good. Commercially, I don't think it's very good. If somebody rings me and it's a sizable inquiry, my first option is, can I come and see you? Let's meet face to face. Let's come and see you. And not everyone wants to do that, but the majority of people say to me, yes, let's get together.
Yeah. Brilliant. Well, thank you so much, Robert, for joining us today on Capital Without Borders. And thank you to everybody for listening. And yeah, tune in and remember to subscribe for our further episodes. And thank you again, Robert.
Thank you, Kate. Thank you.